Good morning, everybody. Welcome to the Flow Show. It's Tuesday, and thank you for coming and watching us rather than the clown at the Bank of England or the clowns at the Bank of England, who are currently waffling on about not much at all. We'll get into some of their comments if they pop up and are relevant as we go along. Morning, Kay. How you doing, mate?
Hey, good morning, Ryan. Good morning, everybody. Yeah, I'm doing fine. I'm doing fine.
Good to hear it. Good to hear it. Right, let's get stuck into it and starting as we often do over in China. The PBOC fixes, the estimates for the fixes have finally starting to reflect reality rather than estimating the fixes to be some 7, 8, 10 big figures above where it's actually trading, as it has been for the last few months. The estimate came down to 7.1677, so more in line with where the rate is. That's the estimate. And then the PBOC went and fixed it lower anyway at 7.1406. But some signs that those who are picking the rates, I don't know where they're picking them out from. As I say, starting to see a bit of reality. Now, big moves we may have seen in dollar China, and they're continuing again today with another bit of a breakdown. But China's state-owned banks have been apparently acquiring dollars via the onshore swaps market and then selling them in the spot market. So they've been helping this move along, which suggests that they're happy with the way this is going. And no real reason to stop it as of yet. So maybe this will continue. A lot of this also is obviously these dollar moves that we've been seeing. So they're just giving it a helping hand along the way. We're into another or the next support level just down here around this. Let's put on that one around this 710, 712 area. That's my next support zone. We haven't quite got down there yet, but I expect a bit of traffic there, maybe where they take a bit of a pause on this move. But as I say, a lot of it is dollar led, so we'll see where that wants to go as the main driver. Over to the RBA, and they had their minutes out, which some are saying looked a bit more hawkish. There's a bit of a mix. The first line out the RBA was that the board saw a credible case that a hike was not needed at the November meeting, but then judged the case for hiking was stronger. The main hawkish slant is that they see that inflation risks have increased, but no news there. They say that further tightening depends on the data and assessment of risks. They saw a risk of increased inflation expectations in case of no rate hikes. They said that CPI forecasts would be higher if not based on 1 to 2 hikes. The risk of not returning CPI to target by the end of 2025 has increased. So still very fearful over what inflation may do and inflation expectations may do, but it was a close thing whether they hiked or not at that meeting, and that balance of risks just tilted them into a hike. Over at the Bundesbank, they've issued the latest monthly report, and it makes for just reading the headlines makes you feel a bit sorrowful. They say that the German economy is heading for another poor quarter, and then it's going to be an arduous recovery. They expect GDP to decline slightly in Q4. And here's a technical term for you. Go back up somewhat in Q1. Not exactly a bullish call from those guys. Bit of par for the course, Kay, regarding the Germans at the moment. They're seeing a bit of a slump, and they see no light at the end of the tunnel.
No, and they have this additional weight overhanging the budget, right? Where the Constitutional Court ruled it unconstitutional to ship some 60 billion euros from the pandemic funds over into the green or reconstruction or green or whatever funds, and that could cause a bit of a gap in their budget as well for next year. So Yeah, Germany is not out of the woods yet. That's for sure. Yeah, I think the rest is we will be we will be data watching to see whether they crawl out of the hole or not. I think the PMIs later this week may give us some sort of a hint. But nah, the overall situation in Germany is still not great, right?
Yeah, it's going to be funny if the other countries improve and end up dragging Germany out the mire. That'd be
Could
a
be.
first for the eurozone.
Yeah, could be. This being said, and there's not much talk about that as well, because we always watch Germany, France, then Spain, Italy, and stuff. But the latest data out of the Netherlands were not that great either. So I'm a little surprised. Well, I'm surprised. Yeah, in a way, I'm a little surprised the euro crosses. Dollar is one thing, but that the euro crosses are didn't do much worse so far than they are actually doing.
Yeah, exactly. And speaking of France, they've been put on the fiscal watch list by the EU. We're about to play in that game again. A lot of countries obviously got a free pass on their fiscal stances over the pandemic. Rules pretty much went out the window, but those rules are coming back in, i.e., the levels of debt to GDP and deficits and all that sort of stuff that they have to stick to as part of their agreement with the EU. That's all coming into focus. So France are back on the watch list. What happens is if they miss their targets, they get a strongly worded letter written to them, how they'll quake in their boots at that. Staying with the Eurozone and the ECB, ECB's De Kos says it's absolutely premature to start talking about interest rate cuts. And the interest rates at current levels should be enough to do the job it needs to do. So even some of the dovish mob are now fighting back against the rate cut rhetoric. ECB's Villeroy says we should expect more bond volatility and renewed increases in yields will be another reason not to hike rates. Again, another bit of a pushback against cuts, says he sees rates plateauing for at least the next several meetings and the next few quarters. Over to Bailey, as mentioned, he was out late last night as well, saying it's far too early to be thinking about rate cuts. The labour market, despite softening recently, remains tight and wage inflation remains elevated, and that service inflation remains much too high. He's been singing a bit of a similar tune this morning as well. BOE's man, one of the Hawks, says would like to see rates higher than now. Just going to look, see if there's any latest comments. Ramsden says would not rule out having to raise the bank rate further in the future. Bailey says the market puts too much weight on current data. So again, a bit of a pushback also in the rate cut plays as well, and some even suggesting rates may go up. The story across the BOE and many other central banks is that the job isn't done as far as those guys go. Fed speakers have been a bit quiet, thankfully, so not much from those guys. On the data front, not a lot either. We did have that 20-year auction, which went through pretty well in the end, Kay. Just a pip basis point on the yields, nothing to write home about. Demand solid enough. A lot of people putting that 30-year auction last week down to those problems China had accessing their electronic platforms and whatever, that cyber attack or whatever it was, as a reason for upsetting it. So it looks like we might be, for now, over the worst fears in terms of these other auctions.
Actually, it does look like some bond buyers, I mean, came rather to the 20 because they missed the 30 because of those cyber attack reasons also. Because we had the when issued already below where the market was, and then we went through for nearly a BP, so there was enough interest there. It's not either like a huge auction either, right? So 16 billion, but the 20 years is not, it's actually the treasury that brought it back to the fore, because they need their financing, because 20 years usually is not like a massively traded one. But yeah, and anyway, it did have its impact at the time, because the 20-year yields started to come down on the back of it as well, and keeping the dollar on the defensive too, in the process.
Yeah, and obviously a much lower yield there than the prior auction as well, down by some 50 basis points, near enough, on that. So yeah, a bit of relief for America and Yellen and all their borrowing plans they're going to be coming up with. Excuse me. Right, bit of data this morning from the UK. Not much to write home about. Public sector net borrowing, not as much as expected. Obviously, we've got this autumn statement coming up tomorrow, so the market and the OBR, Office of Bodged Responsibility, is going to be looking at that to see whether these borrowing numbers are going to be changing based on what the Chancellor decides to do, whether borrowing's cut or whether it's increased. We'll see how any tax cuts get funded if they come along indeed. But otherwise, a bit of a quiet one on the data front. Coming up today, probably the pick of it is the Canada CPI numbers to come. Then we get a bit of housing data later on from the US. So Canada CPI expecting to see another drop back in inflation. Headline inflation they expected to drop to 3.2% from 3.8%. Then we've got these core measures, common, mean, medium, whatever they call them, also expected to drop back somewhat as well, not by much, a pip here or there. Keep an eye on this core number. This is the BOC core, lasting at 2.8%. These numbers still hovering outside of the Bank of Canada's target range, if you like, their 1 to 3% range that they look at. The BOC core is within that. Probably the bigger market move is if it comes in higher than expected, or even higher than last month. That might send a few wobbles into the loonie, because they got scared last time, the BOC, when the inflation went up. They might get scared again if it does again. If the downward move in inflation is confirmed, i.e. these expectations are confirmed, or we see stuff coming in softer, might bring a bit of CAD selling. I don't think it'll be much, but it might be something if the dollar's remaining weak as it is again today, then a half decent rally in dollar CAD might be something worth looking at for a bit of a fade. But it was looking a bit stickier earlier today. It's pulled back a bit, pulled back a bit in the last few minutes, but earlier today just looking a bit sticky, running up into the 137.30s. Now we've seen that move off as well. So keep an eye on that one. Maybe a rally up, well, probably a bit of a hope trade. We get a rally up to maybe 137.5, even up to these highs on the back of a real soft CPI number. Might be worth looking at if the dollar's weak elsewhere. Anything you've got to show us, Kay? A bit light on the headline front and whatnot this morning.
No, yeah, it's light on the headline front. I don't know where people found these RBA minutes more hawkish than what we had over the actual meeting. To be honest, even I think Bullock on the sidelines said that they may be in a decent place to fight inflation now, and I reckon this is one of the reasons why, despite. I mean, the dollar is weaker. Aussie, Kiwi, everything is higher. But Aussie Kiwi came down a bit, and I think that's probably due to the fact that there was this one line from Bullock on the side saying that they may be in a good place now. And there was also a discussion whether they really had to hike. So I think it's just a bit of a market reaction. But it had more effect on the cross than the dollar really. Yeah. But yet, I mean, yeah, Aussie both Aussie and Kiwi are seemingly also benefiting a bit from what's happening in the Chinese yuan. We also know that December should be a pretty important month for the Aussie dollar, as we will have a decision made by China on whether they reopen trade fully with Australia or not. So that's one for the calendars. I don't know whether there's a fixed date. I think it's just December, and somewhere mid-December we should know what's going on in the trade relationship between China and Australia. I think the market already traded a little bit of positiveness because the Australian trade minister is hopeful for a resolution. So this could give Aussie an extra push in the back, or if China last minute decides that Australia is not they're not good enough, then it could give Aussie a kick in the nuts. But yeah, that's music for later. In the meantime, yeah, still trading a bit positively those commodity currencies. Yeah.
Yeah, also seeing this morning that iron ores are apparently up quite a bit on a bit of hopium that the China stimulus measures stoke some demand. It's a bit loose and wispy, if you ask me.
Well,
These Kiwi, particularly Aussie, follows what happens in iron ore markets,
yeah.
like the commodity space. So it is what it is. Whether we've heard all this stimulus stuff before, particularly regarding the property sector. So we'll see what comes of it. I won't be following those sort of headlines just yet on the back of that. But yeah, iron ore has been up, as I say, trading higher overnight and whatnot. Sorry, mate. Yeah.
No, I know. I
No, no.
didn't say anything.
Right, Dom. Welcome to the Flow Show. This is your first session. I'd like to know if you can review trades that you take and what's in our trading routine and the sessions you trade, the things we look at on a fundamental standpoint. Obviously, we welcome to the Flow Show and we welcome your input as well. So anything you've got to say, pop it in the comments there and we're happy to discuss it. The Flow Show we're not just an analysis show. We don't just put up charts and look at prices, although we're going to do that shortly because there's not much on the headline front. We do take a bit more of a fundamental overview of things. It's almost like trying to keep a running commentary. We hope to keep a running commentary, to note, where central banks are at, where the data's at, when we see the changes, how those changes come, how they can affect things. So it's a bit of a running thing. You won't learn everything, obviously, in one show, but if you follow for a while, then you hopefully get in the stream of it, if you like, to know our thoughts and the thoughts of the room, and what things are happening and how that relates to how we trade, how we position, and that sort of thing. But we obviously talk about a lot of charts and our trading and stuff. And that's exactly what Ali said. And Ali's very good at giving us his trades now and again for us to have a look at. Though he says he's not feeling too well, so he's having a month off trading. So best wishes to you, Ali. I know the feeling, mate. I hope you're back on the horse very soon. But you're right. If you're not in the right frame of mind, better to sit on your hands and let it go and just wait till you're a bit better. So, yeah, speaking of trading, I'll have a quick look back at dollar China. This is one that I've been short up the top, 736, and was messing around in the 732s as well. Been waiting quite a while for this breakdown, and it's coming, and definitely not looking a gift horse in the mouth. And another little bit of a cut of my short down here in the 713s. We are coming towards a bit of a zone now. Might be a bit more solid than some of the other levels we've had on the way through, down at the 712, 713, 710. You can never really pin it on one number. So this area down here is my next support zone. This is going to be quite an important one because this has been quite some moves. So it's going to run into trouble. This is where I'm expecting it to run into trouble. Maybe we get a little bit of a pause for thought just to see what the PBOC wants to do and officials in China want to do. Has it gone long enough, or are they happy to keep pushing it and letting it go further? I've started moving my stops down from up above. If we get under this zone though, I'm going to yank them right down. My stop at the moment just above 727, but yeah, if we get below 710ish, 709, I'm going to bring my stop right the way down, probably to the low 720s, if not further. And this will start to be my area that I'll look for to become resistance if we break below it. And then we're probably looking at maybe a move down to the 7, which is going to be a big deal if and when it happens. So that one, yep, still going the right way. I'm not willing to add to the trade at the moment because it has gone hard and fast. So if there is a bit of a recovery, you know, it could maybe get back up to 720s, maybe even the underside of this zone up here, 722s. You know, it's that hard and fast. So being a bit cautious with seeing what happens on the upside. But the trend is your friend, as they say, and it's finally going. I'm getting a little bit of feeling that the euro is huffing and puffing now, just generally around some of the pairs. Euro sterling, it's been trying to get up through this area. It's not managing it. I want to see it bust through here and then see this area become support. It's not happening. We're seeing it coming off again this morning. Not easing down too much. Obviously down into 87, the big figure, 20, whatever it is, this area around here is going to be important again. We're maintaining holding above there. So a test down here again, if it holds, just keeps this break in play. But then we've got a pretty tight battleground between here and these highs. So something we'll have to give eventually. We can't be knocking around in a 40 pip, 50 pip range forever. So what will happen is the decision we made, either we'll break back down again and then we'll find this resistance, and then we're probably going to go back testing the 86s, or if we manage to put in a strong hold at 87, keep putting in these strong holds, then we're probably going to break to the upside. But it's a bit of a knife edge, this, and the same can be said for the euro. It just seems to be petering out a bit. We have made a new high, but we don't seem to have the same sort of speed today that we've had prior days. So are we going to get a little bit of consolidation like this? Who knows? 109.40-ish, 35.40 is that old level. That's where we found support. Let me just zoom it in a little bit better. There we go. So that was an old level, resisted, supported. Now, are we going to support it again? If we do support it again, it's going to keep this alive. Then we should go on and break these highs. If we come back under, though, again, we might be on for a little bit of a failure. Then we're looking down at 19, 109, 109.10, that sort of area as the next level of support. But it's still going all right, so I'm still happy with it. I think if we get a third failure up here, I might take a little bit more off. My last cut of my longs was just on Friday, just below 109. So, yeah, I might have a little nibble or just take a bit more, put it in the bank, and just to see what it wants to do in the meantime. But we're also going to be watching for some of the data, US data as well, to see what happens on this side of things. Cable, well, Bailey's talking and it's not going down, so something's broken. But it is maybe the rhetoric from those guys that they're not going to cut as fast as the market perhaps is expecting, is putting a little bit of bid in the pound, though I shouldn't think it should be too much. But the market's still going to be sniffing around with hikes. We've obviously got the autumn statement from the Chancellor tomorrow. Still not expecting any big waves from that, but you never know what the market wants to do with it. K-Man, you got anything you want to show us? I'm sure you have.
Yeah, a couple of things. On that sterling, though, we are at relatively interesting levels on the cable. And of course, you already said that euro sterling is starting to run into a bit of resistance, trying a lot to break up and not going. I'm just wondering, you know, if that statement tomorrow cannot be some kind of a trigger for a next move in sterling. Whether it's up or down, I don't know. But this we've come to this level in the cable. I think 125, 5.5 is a good enough zone on the cable here. And then that euro sterling as well. I'm going to be very interested though in seeing what the market does with the with that statement tomorrow, because we know that politically there's a bit of pressure there, and perhaps the players want to take that into consideration as well, whether he gives like a good impression or a bad impression. It's all going to be about the impression, right? Rather than perhaps the actual numbers that he puts on paper.
Yeah, I'll have to do a bit of digging, because we usually know most of it beforehand anyway. The press always leak that this is in like with the inheritance tax stuff. He's expected to do something on, so we usually know most of it anyway. Which leaves little room for surprise, obviously. So I'll do a bit of digging after the show and see if there's any bits and bobs. But no, right, I shall hand the baton over.
I am going to take Dom's question on the end.
Yep.
Yeah, so I mean, first of all, euro dollar, Ryan already showed it, perhaps a bit of a different look. So we've got the big decline that we saw from 2021 down to 95. We're still, okay, it's been traversed a couple of times already, but that's still hanging around 109.40. And then we have, as already discussed a good few times, we have the 109.60, which is the 61.8 of the 112 104 decline. So there's a bit of interest around here, around this level in the euro dollar, and if it runs out of puff, like Ryan says, this could be a good level to start to look for some corrections. But we have to also acknowledge that this level here that we broke up in the high 108s should already show up if ever this starts to go down, especially in the context of those lower US yields. I'm still not overly impressed by the differentials, and that's why I am trying here to I'm actually trying to counter trade it here for a little bit, but I'm not going to hold it for too long. If we start to get above 109.60 and hold, I'm probably going to let it go. I'm not in the mood to risk a lot of capital on those positions that I'm running now. So yeah, what's happening around 108, 80, 90, I'd say. The other thing I also want to mention is that usually when we see those moves, you know, those pretty strong moves, it's also driven by what model funds are doing, and and that is likely the reason why we don't see too much of retracement right now, is because they likely still get triggers to sell dollars and buy euros, buy cable, buy Aussie dollar or Kiwi dollar and stuff like that. We are going to need to close certain time frames, whether it's the 4-hour or the daily, just below the prior close or the prior low, and then those triggers will likely stop, and we have a more a bigger possibility to get down again. Also, Gregor in our room was looking for a bit of a wave retracement in the dollar. So let's see if turnaround Tuesday has something in it. Right, on the yen. All right, there's a couple of things we watch on the yen, and just Dom, to reply to your question, I wasn't short cash, but I was long 150.5 put in dollar yen that I put on early last week, because we were trading close to those highs again, and looking at those yields, it was a bit out of whack with the yields. It expired yesterday, so I don't have anything in the end right now. It's still heavy, undoubtedly, but the first test here of that spike low that we had in October the 3rd, where the people are still discussing about what it was, I just think it was like one big futures trade and overloading the market, and the market got spooked. And around this top here from August, just overshot it just slightly. There's a bit of support around here in the dollar yen that held. We are correcting a bit, but if you look at it on the daily, we entered the cloud. We opened just below it, and Japan, they really trade these things. Decided to sell more dollar yen. And yen crosses, by the way. I'll have a quick look at stuff like euro yen, for instance, as well. So this is your support around here. But if you look at a bit of the wider thing, we've got the bottom of the cloud, which today is still in the 145s, around 145.85. Then we have this here, and let me take the cloud away for a sec for clarity. We have this support line here. If you look at it broadly, dollar yen has been trading within this channel since March. We are still above it, okay? Oh, we're still inside the channel, let's put it that way, but we're still well above the support area here, which is coinciding with the 38.2 of this last move from July, when the dollar hit the bottom versus euro as well, right? And so we're still around above this 38.2, which is in the 146.30s, and we are as well above the 23.6, which is around 146.10 of the move, and that was the move post when we were done with that big decline that we saw end of last year, start of this year. So we are still above those levels. In my opinion, this is going to be your big support zone right now. If we start to break below 146, 145.80, then there's probably more to go, okay? Until then, if you look at this, we still have to look at it as a correction, because we did have pretty big corrections here, and yet we continue to move higher. So if you start to trade around here, these low 146s, keep a very close eye on it, because it could just be enough for this round again. I'm not a huge fan of moving averages, but the 100 moving average comes around at 146.5 right now, and it may just add to the confluence of interest around this level, okay? This for the dollar yen. Where it's been interesting, though, on the yen side of things, apart, if you take away the dollar, is on the crosses. We started to turn around on the crosses as well, and that's likely why your dollar yen move has been pretty big over the past couple of days. So yesterday we tried below this euro yen. We tried below it. It held, but then today it's back below this channel trend line. Okay, and that is around 162. Call it 15.20. That's going to be your zone, your level where you want to watch it. If we start to get back above, perhaps that yen strength that we have seen over the past sessions is starting to wane. Where can it go down to? Well, I'd say originally, well, okay, it's already here around 161.25, the sort of the low that we have done today. But I'd say keep an eye on what's happening just below there as well, because we have a bit of traffic here. Remember, we had this high, bit of traffic in this zone. We're undecided, and then we went for this last leg higher. I'd say keep an eye on what's happening just below 161, around 160.70. If that would go, then there's a potential for a deeper correction, okay? But on the top side, I think if we start to close back above 162.1520, that's going to be a bit of a negative for the yen. And we are seeing it on other yen crosses as well. Not going to go too much in too many details, but also Aussie yen is trying really to break lower. We've already failed up here, but then we're trying to break lower here, which could lead us quite a bit deeper into the mid 95s. But again, keep an eye on if this starts to hold and then crawl back up, okay? Because I think in regards to what's happening on the yen, and I don't really know the reason why, but those Japanese JGB yields have been coming back at nearly the same speed as the dollar yields over the past couple of sessions. So that in turn tells me that it may just not be your full reversal yet. To see a full reversal on yen and for the yen to stay strong for longer, I would have loved to see those things still hanging around in the 80s, 90s, where the market expects that the Bank of Japan is going to normalize. Your JGB yields should, in theory, have been holding up better here, but the investors are already happy with stuff close to 1%. So that is holding me back from really going long yen for longer, okay? That for the yen side of things. We have to mention the Canadian dollar, right? It's CPI then. So we've been trading this uptrend on the dollar CAD, tried to break above, failed, and now we are looking at a pretty decent support area here. You know, you have the 136.60, the 55 DMA, but then you have this trend line, you have this trend line coming in, and it's all going to happen in this 136.40, 136.65.70 zone this afternoon. That's where I think is going to happen. If the Canadian CPI remains a bit stickier than expected, remember, like McClem was a bit reluctant to start to really go onto the dovish side. He has been a bit more hawkish, but then he went to the middle end of the let's say the pendulum. He swung back to the middle. But if this CPI this afternoon remains stickier than expected, I do think we are going to have a really decent test of this support zone here. Okay, and if in turn it's weaker, then I kind of agree with Ryan. If we see a move back up to, let's say, 137.75 in the context of today's dollar, it may just be enough. The issue that the Canadian dollar will then have is on the crosses. That I think if really, because as we can see, this euro CAD has been ramping higher. We are around resistance. It has been coming off just a little bit, but it's still very big. Okay. If in turn CPI comes down, I see stuff like the crosses are going to be an interesting watch on the Canadian dollar, because then I can see a next round and perhaps taking us into the 151s, perhaps on the Euro CAD, for instance. If you look at stuff like the CAD yen, it's a little bit messy, my picture, but CAD yen, if you see, it's been doing it's been coming off together with the dollar yen, but we're very close to supports here. 106.90, 107.10. We're trading about 60 points higher now because of the dollar yen coming back a little bit as well, and the dollar CAD coming down to the figure. But if Canadian CPI would undershoot, keep a close eye on what's happening here around 106.90, 107.10. Okay, 15 on the Canadian yen. This is going to be a pair which I reckon a fair bit of market participants will be scrutinizing. Right. The what else? Oh yeah, Aussie and Kiwi. The Aussie. So we broken above the 65.25, and this time it holds. All right, but we tagged the 50% of this move lower here from July down to the lows in October. We've tagged this 50% here. If you take the absolute high, it's 85. So I mean, really there. Above here, as you can see, we are entering a bit of a traffic zone, okay? My big level of interest is still going to be here, 66.5 to 66.80, okay? But it could already be enough around the 50%, which is about in line with that 61.8 on the euro dollar as well. But for as long as we're above 65, 20, 25, it's still, we have to say it's still supported, right? So we could see some kind of correction here, but if you start to hold 65, 20, 25, then maybe we are on for the next leg higher. But so this is your immediate resistance here, and then 65, 20, 25 is going to be a pretty decent support right now. Kiwi has really outperformed quite a bit. I had this 50-55 zone here on the Kiwi. Trend line coming in, prior high, prior lows, bit of a fib zone as well, and we are through. So this is going to be your failure level here. Whether 60, 50, 55 stays bid is going to be a question. I wouldn't say for tonight, because we have those Fed minutes tonight, but we've been talking about it in the room, and the market is seemingly attaching some or hopium that the Fed minutes may show something to have the dollar correct. But we've heard from all those Fed speakers already a dozen times. I don't see what the Fed minutes are going to really change this afternoon. You can always have like a bit of algo blips, and I can be wrong, of course. Perhaps the market is going to take it as either a correction trigger or a trigger for more dollar weakness in turn, if some dovishness transpires. But I really think the Fed minutes tonight should be, in theory, a bit of a non-event. But yeah, watch this 66, 50, 50, 60, 50, 55 on the Kiwi, okay? If it starts to retest and hold, we could be in for another 100 points here. I just spotted this on the oils, because there's a lot to do about the oils and what the Saudis could do. It's not really affecting Brent, but it's affecting Brent by correlation, right? We came to retest some levels here, 83 on Brent, and 83, 80, 84 is your next level. So we had a pretty decent rally back up, but here we have to monitor it, okay? And it could be important for what's happening in the Norwegian kroner, because the Norwegian kroner really took advantage of this move higher. It has been helped by two things: the gas and energy moving higher again, and the weaker dollar. We had a pretty decent move on the Norwegian kroner, but I'm starting to think that we may, not far from here, start to run into support, and we are actually actually quite close. 1163, 1159. So this 60-63 zone on the euro Noki. Keep an eye on that one. And then on the dollar Norway, if you think that the dollar has just retraced or has done enough right now, have a look at what's waiting here on the dollar Norwegian krone. 1059, 1061. It should be important enough. We are not far away. This is only 0.5%, which in a currency like Norwegian kroner is quickly done, okay? If you think that oils are not going to hold, this may be a level where you pay attention to. This one as well. It just went a little bit below this spike, but still only 1058. So I'm at least going to get interested in what's happening here, okay? I think this is an interesting one to watch, together with what's happening in Brent, for instance, and also in the knowledge that the Norges Bank is still selling Norwegian kroner every day. Smaller amounts, but they're still on it. Okay, so I don't know for how long this can continue to really dump right now. Okay, anything else? I'm just reading through your stuff. Just reading through your stuff. Oh yeah, that while I'm just showing the S&P. Is there anything else we should talk about, Ryan, that you saw in the comments? Because I mean, of course.
No, I can. Well, nothing. Just a little bit of insight. But you carry on with the charts. I want to have a quick look at gold anyway as well.
Yeah, I was about, but if you're going to talk about it, then I'll leave it where I'll leave it. I'll just have a look at silver. Some people's I haven't seen it. I don't see it here, but there's some people calling for targets here in the 45.50s on the S&P. So I don't have it. I don't really see it, but just bear in mind that some people are looking at this 45.5. I think it all looks still quite big, but if we start to get back below 45.30, 25, we may see some cracks appearing. Okay, I'm not sure for how much longer this can go on. I know November is usually a very good month. People were underinvested, but for how much longer it can go on, I don't know. I'm going to have a look at here this 45, 25, 35. If we start to get back down, I may just give it a try to see if we can get back down into the 44s. But that is just a thought right now. I'm not in it. Yeah, silver. We're hanging around this bit of a trend line. I think it's a bit neutral right now. Yesterday we tried to get under this support zone here in the 23.40s, but bounced together with oil. We're just hanging around here. I'm really trying to be patient to see if we can get back down into these levels here. To add to what I have now in the longs, I really am going to need to see a close above 24.1520. Okay, if we get a close above here, then I reckon we can shoot higher. But before that, I would say we can trade ranges for a while. All right. Yes, Gavin, that's right. Nvidia tonight after the close, and everybody is going to really watch that closely for AI, right? That could get the Nasdaq rocking and rolling. Back over to you, Ryan.
Thank you very much, mate. I'll just grab it quickly. I don't want to keep your time too long. Can you see my screen okay, mate?
Yeah.
Yeah, cool. Right, just quickly to Dom about fundamentals. If you're not versed in fundamentals, it's a big rabbit hole you can disappear down, most definitely. The easy way to look at fundamentals, there's always two sides of it. So know what an economy is doing, know what a central bank's doing. You can keep it simple, just know what growth is doing, know what inflation is doing. From that, you can pretty much guess what a central bank is doing. The other side to that is knowing what the market expects an economy or central bank to do. That's what brings us these big moves. One of the reasons why the dollar's getting kicked up the arse is because the market is talking about Fed rate cuts. We're done with hikes. The market wants to know when cuts are coming. That's the trade. It's expectations, market expectations for central banks that drive the bigger price moves, not so much what they do. That comes secondary to that. Where we have a bit of disparity is if the market starts getting too dovish about rate cuts and the next round of meetings in December, they push back against that dovishness. Then it gives us our price volatility. So that's the simple way to look at fundamentals. Hopefully you'll stick with the Flow Show for a long while, or maybe join us in the chat room and you can learn a lot more about fundamentals. But keep it simple is often the best way to start off. Quickly on gold, I'm looking at maybe getting into some shorts into this 2000, these prior highs up here. Purely from a bit of a technical play, there's not a risk premium at the moment as it was in this move up. So that's a bit of caution as to why we're grinding back up when we haven't got that risk premium. But obviously the 2000 mark and these highs proved themselves before. So a bit of a tech play I'm looking at here, maybe some shorts into 2000, into those highs. I'll keep it very tight. 2012, 13, 15, whatever, I'll likely be out. But just getting a little bit of a sniff, perhaps for a short up into these areas here on these gold moves. He is playing nicer with the techs at the moment. The pullback off that move hit the zone around these 1930s. That held. and no surprise to see it bounce from there. So maybe a bit of range play to be set up in. Anyway, that's what I'm looking at on the gold front. And with that, we shall leave it for today. Thank you very much for coming to the Flow Show. Anyone else who's new and joining us, welcome as well. Please do pipe up in the comments. Let us know your thoughts, your trades, what you're looking at, anything you want to discuss. We're more than happy to do so. We like having conversation here rather than just K-Man listening to me and me listening to K-Man. So keep it up, guys and girls. Ali, hope you feel better. The rest of you, thank you very much, and we shall see you tomorrow.
Have a great day, all.
Cheers, mate.